everybody. For those of you who don't know me, I'm Lauren Kelley, CEO of OPEXEngine. OPEXEngine is a SaaS platform for benchmarking financials and operating metrics. We work primarily with finance and CFOs to help them in the budgeting and planning process and to diagnose areas of weakness as well as strengths. So today I'm super excited about this topic, and it's a long time coming. And I'm super excited to be here with Andrew. We're going to talk a little bit about why is this an important topic? How did we get here? And also look at, how companies evolve in terms of their spending in R&D. But the primary thing that we're going to talk about is just from bringing engineering management together with CFOs and with the finance organization and with the business folks, because that's where it all starts. And that's where both Andrew and I think, feel that there's a lot of work to be done there. And we hear that from our community of SaaS finance folks, is that sometimes R&D and engineering management seems like a black box and they'd like to understand it better. So I wanted to start with just a few benchmarks. And what we did from our platform was segment out fast growth companies and slower growth companies. And one of the key metrics that most companies look at is just R&D as a percentage of revenue or R&D as a percentage of ARR. And as you can see, fast growth companies tend to spend a fair amount more on R&D than slower growth companies. And if you look on the right-hand side, we calculate something that we call R&D ROI, and it's basically just saying for every dollar that you spent last year in R&D, how many dollars or what portion of a dollar are you getting in new revenue in the next year? So granted, you could talk about it should be over 2 years, it should be over 6 months or whatever, but it's a fairly consistent way of looking at it. And since we're in the SaaS industry, usually you want to see some kind of results from the investment you made the year before. And you can see that even though the fast growth companies are spending more on R&D, they're also getting more of a return, and the slower growth companies are getting less of a return for the money that they're spending. And then if I thought I would just throw out here as a basis to sort of kick off our conversation, looking at Slack, probably all of you hopefully have set your Slack notifications on quiet during this webinar.
I did.
Andrew and I talked about that before. And, one of the most well-known companies out there, and particularly seen as a leader in product-led growth. So clearly, Slack spent a lot on R&D. They went public in, I think it was June of 2019. So for the most part, on average, for those couple of years before they went public and, even right after they went public, they were spending more than 50% of revenue on R&D. And they were getting good results with that. But if you look at how much money they spent in 2020 and then in 2021, the return that they were getting on that spend wasn't that high. There could be all sorts of reasons for that, but that's why we want to have this conversation and be able to sort of dig into why it's so important to really know where your money's going on the R&D side and what you're getting out of it. So I also thought I'd throw up a few of the metrics that OPEXEngine benchmarks, and we've been doing this for 10, 15 years. Not all of these metrics, some of them we've added over the last couple of years. For our customers who are CFOs. And what I want to talk about is really what's missing from this list. And that's one of the things that Andrew and I are going to talk about today. So with that, I'm also, and I'm sorry I'm giving such a long introduction, but I also want to mention, I remember when you and I first met here, we're both in the Boston area. And I was, I've been on this train of trying to get CFOs and R&D together and to think about, how do you measure the ROI? Because obviously we're in the tech industry and there's nothing more important than what you're doing in R&D. And I was spouting off some stuff about how I thought now is the time that some of these tools are being and platforms are being developed. It's kind of like CRM 20 years ago, when before you had all these great companies out there and KPIs, we just measured a lot of activity, like how many calls did you make, or just the activity of your salespeople, and not really having a good answer around the ROI. And I think that's where we're poised right now. And Andrew's really part of that. So welcome, Andrew. Please tell us how you ended up being so passionate about this.
Hey, Lauren. Yeah, so thank you for having us here. I think, by the way, this is, I've always, heard about your community. I think it's wonderful to see the things you've actually done, helping all of us SaaS companies be better at what we actually do. So really excited to get to talk about this, and for you and I to reconnect, because we had this chat a couple of years back and we haven't had a chance to build on it. I definitely came into this space both as an entrepreneur, but also as a practitioner, right? So me and my co-founders all kind of grew our careers running big engineering teams, big product teams. And, bluntly, when we got started about 5 years ago, we sat there looking at this being like, this can't be the state of the art, right? That where like the way that we interact with finance is a lot of trust me, I need this budget, trust me, I got this, right? Maybe that was how, like we forget that some of sales was run that way 20 years ago. But that can't be the way that we do it today. And you just showed us it's too damn important now, right? Like it is, you just showed, 40% of OPEX, more of, like it is a huge amount of money there. But even more important than just the money, for a lot of companies, we've proven in the last 2 years is just like how much software is the engine of growth for companies. And you showed that with some of your metrics there as well, which is, this is important. And if it is important, then let's treat it as such. Let's understand it. Let's invest in it. Let's invest in the right stuff, not the wrong stuff. So I think it is a contemporary strategic imperative here. You can't ignore it. It can't be this thing that's just a black box over there on your budget. We have to make savvier decisions, because there's either scarcity of money or scarcity of hiring, that we have to make these tough choices. And without data, you can't make these tough choices. So anyways, that's how we fell into it, really out of first person experience and realizing this can't be the way we go forward here, given the importance today.
Yeah, exactly. It's interesting. It sort of reminds me of why I started OPEXEngine, because I had spent so much time in business management, and it just seemed crazy to me that there wasn't an independent third-party platform to benchmark operating metrics, but rather we sit around in rooms and everybody's, like pulling stuff out of the internet, or, pulling it from someplace, and you have no idea if it really relates to your company. So clearly you guys are off to a good start. I say start because there's, so much more to be done, but kudos to you for building Jellyfish, and let's learn a little bit about
let's talk shop. Yeah, let's get into this. Yeah, the real stuff.
Yeah. So as we're talking about, you're seeing how much money is invested in R&D. How can the business leaders really understand how the money is being invested in R&D?
Yeah. Well, I mean, I think like we all like, by the way, this is a cool audience, because I think we actually have engineering leaders in here and finance leaders in here. So I think it's a novel intersection on that part of it. So
that was a very subtle way to remind me to launch the poll. So while Andrew's speaking, I will launch a poll just asking people whether they're in finance, engineering, or other. So Thank you, Andrew, for that.
Right on. Well, so while we're actually doing that poll, like we're going to talk a little about this. I mean, I think the answer first and foremost is we have to do better than just this, like, hey, this is 40% of OPEX for 2022 or 2021, right? Like we have to go deeper than that. And I think part of this is trying to understand like how your team is spending your money and time, right? In some ways they're synonymous, right? How do we actually delve into that? And do we understand, oh, look at that mix, right? How do we understand like what people are actually doing? And so look, in lieu of an engineering management platform, I would say that simply you should collect the data, do it manually if need be, right? But you need to understand where those large dollars are actually going, because it's a fixed cost, it's scarce, right? And that'll lead you to actually make trade-offs around where you should be spending on things. because you can't just blanket pile more dollars in there. You actually have to understand where those dollars are going to. Is it helping in growth? Is it helping in retention? Is it helping in new features? Is it for this product line versus that product line, right? So I would start there as a way to actually lift the covers in and really kind of understand those products. You're signing the check every 2 weeks anyways, so better to know where it's going. Yeah.
So the question, and we're going to be talking about this throughout the whole webinar. So maybe you don't have the perfect answer because it is nuanced, depending on the company, et cetera. But, beyond just R&D expense and maybe looking at it in the way we're looking at it at a high level, the ROI on R&D, what are the KPIs that you think, do you have some favorite KPIs as an engineering manager that you have a lot of success in your past history and as the leader of Jellyfish? What do you recommend?
Yeah, so I like you already alluded, there's no one size fits all because every one of our businesses are special snowflakes. But I think there are general themes that we should actually tackle this, right? Because, first and foremost, I do subscribe that we should understand your percentage of your team's time being spent by product line, and then percent on macro category, right? Which you alluded to earlier, which is, let's just say maintenance versus new features or growth versus retention, right? Just understand the macro spend of your time. Really recommend you do that because I think it has tons of strategic value in doing that. I also think that we should work with our teams to understand how are they getting faster. And this is where the culture of the teams fits in. Every team has a different measure of that. So it could be their agility. How much are they completing on a say-do basis? Or are they actually just pushing more, activity through? Just even know that if you doubled your team size and you're not getting more activity, well, something's going on. You should know about there. And then the last two I want to make sure that we don't forget is like you should be looking at quality, right? Like that is the full cycle quality, which is, how are customers perceiving outages and failures and those things? And like, how much are you seeing over time? Like, while on a given day, it may not seem that important, over trend, it actually matters. And remember, it's a zero-sum game. So like if we're doing, bug fixes or support or maintenance, we're not doing new features for growth and stuff like that. And then the last bit is around hiring, right? You should be looking at your staff, how much is churning, how much is growing in. I mean, this is analogous to all the other organizations, but given the hiring climate today, you have to pay attention to that.
Yeah, no, absolutely. And even to add more nuance to the question of the world we live in today between remote and hybrid and the amount of money that's being invested there and the importance to your revenues, but also your quality of product. Are there areas where, how can finance understand from the engineering management, how is it working with this huge remote workforce that not only is remote, but they're possibly in a whole variety of different areas, including different countries?
Yeah, I mean, like, look, we've definitely seen relevance and acceleration, of course, in this kind of hybrid remote time. And of course, this has been a complicated time for all of us in the last couple of years. But I think it's actually more visceral, more important of these things because, like, look, I think a lot of us are used to worlds where we'd walk the floor, we'd have pizza lunches, we'd ride elevators. You'd instinctually get what was actually happening on the team. You'd instinctually be like, oh man, all these guys and gals are getting sucked into this, big critical issue. You'd instinctively realize, oh, we're not gonna be able to deliver that other feature that we said we're gonna go do, right? You'd subtly notice those just by even hearing the noise on the floor. Boom, all of a sudden 2 years ago, we don't see people anymore, right? And so all of that instinct is gone, right? And you're hiring people you have never met before face to face. So how do you know we're actually getting better? How do you know we're actually delivering things? So I think in these times, I think it actually is more important to be on it with the KPIs, to actually have automation do these things, because we've lost all that soft signaling that we as leaders used to have in walking the floor. So like, I think you're really coming back to your lead on this one, that KPIs become increasingly important in this hybrid world, and to find that answer for your organization around like, what are the ones that we need to measure to make sure the business is humming?
I think that's a great, color on what that means, and it just reminds me of the last couple of tech companies I worked at, engineering managers definitely bought into the management by walking around sort of methodology of walking around, checking on people, looking over their shoulders. And not to sort of belabor the point, but it is kind of like 20 years ago in sales. You would walk around and sort of check what people are doing and make sure they were productive and active. And now you can, it doesn't matter what people are doing. All it matters is the outcome and the, productivity, because we have metrics to measure that. And that's what we're looking for on the R&D side as well.
I would actually, last thing I would add, Lauren, which is like for some of you folks that have smaller teams, like if you have a 10-person engineering team, let's just say, for example, like the reality is that most leaders can probably flip through their code, kind of get the instinct that way. So they could digitally walk the floor to an extent, right? Again, that's different perception than literally walking the floor, but there's a layer of that. But what's actually happened here is like, look, when you cross that next layer of management, I don't care how much code you can read, right? Like you're going to lose that ability and instinct, right? And so if you lost that and you can't crutch by walking the floor, you're sitting here opaquely trying to understand what the team is doing, right? And actually, this really comes down to, it's not just that people are actually, it's how do we get the most acceleration out of the team, right? Like this is like, you don't want to make this a draconian thing. It's actually about like, look, we have a scarce opportunities in industry, right? This is time for digital. This is time for companies to succeed. How are we going to get the most yield out of this? How do we capture the opportunity? And that means that we have to be working on the right stuff, right? So anyways, that to me is like why this is in the remote hybrid world became very visceral, and it probably accelerated it sooner than without that.
Yeah, no, and in a sense, that's a great setup for benchmarking, because you can't, as a business manager, really evaluate. Now, you're not an expert in R&D, so you can't evaluate whether this is too slow or too fast, whether there's too many bugs, problems, too much tech debt or not, unless you have benchmarks. But fundamentally, you can't benchmark unless you know your own metrics and
Right.
you have confidence in your own metrics. And that's, that's something you and I have been talking about.
Exactly. And I think, just to build on that, there is more than just, there's also benchmarking against yourself. Like, are we getting better?
Yeah.
Right? Like regardless of whether you like the number today, let's just all agree that we should get better tomorrow, right? And there's also intra-team, right? Hey, I have employees or teams that are just stuck. I should know that, right? Like nobody wants to be stuck. Nobody wants, and so you should know that. And so like these are all kind of like second order parts of the benchmarking discussion on these things. But anyways, I think we're in agreement here around why it's important to establish these KPIs now.
Yeah, absolutely. I think let's talk about just within the overall area, also getting some nuance around, there's a difference between developing a whole new product and adding features to an existing product. Yeah. Some things are more expensive than other things. How do I know if that's right? Like what engineering management is telling me that, oh, well, this is a really expensive thing to develop,
Well, I mean, I think part of this is you'll learn over time. I mean, like, let's rephrase it the other way, right? I think every company publicly says they have the fastest engineering team and the best engineering.
Absolutely.
And then privately, everybody says, why is my team so slow, right? And so that's the dichotomy of kind of public-private on that part of it. But I think part of this is actually to understand why we're going slow, right? And so let's just take the assumption that we all think we could be going faster. It's a better way to frame it. Well, I think part of this is to understand where your time is going, not just by product line, but the category, right? So I'll meet companies sometimes that they inadvertently, like they're spending 70% of their capacity just doing maintenance on the legacy product that they built 10 years ago, right? All the while, the business leadership's complaining like these guys are going slow. Well, they're not having the critical conversation that we should be having, which is like, hey, maybe we should sunset this product line. Like it is not commensurate with the revenue we're actually making in these things, because I think people sometimes think things are free. They're not, right? And all the while, the engineering teams thinks that they're doing, heroes work, actually doing the maintenance on this, decade-old product, when they're not actually having this critical conversation. Like, what are the trade-offs we should be making here? And I'm not saying always shut down old product lines. I'm just saying, but if you're not having that conversation, then automatically you're making that decision, right? Which is a mistake, I think, for a lot of folks to understand where they could go faster on these things.
Yeah, I mean, it's great to hear you describe that, because a lot of times in some companies, business management can only look at the whole aggregate of R&D and can't really distinguish between the different pieces, the different paces of the different pieces, the difficulty in one area versus another. So you lose that, you lose that important color to an understanding of having the information about it, so you can make those trade-offs. And otherwise, there's just this momentum in R&D to continue doing what they've always been doing without any business input.
And more than likely, if you survey the engineers, they don't want to do that either. It's just like, this is one of the clear cases, like we're forgetting to talk, right? And we're forgetting to talk because we don't have the data to do that. And so anyways, I often find that as an unlock of how you can actually go faster in that setting, which is just really understanding, like, do we need to be doing all of these things?
Yeah, exactly. So that's something, it's interesting. I think it was like 5-6 years ago now. I have to say that we started benchmarking tech debt as a percentage of R&D spend. And we did that because I was lucky enough to, one of our customers at the time was SendGrid, and SendGrid's CFO, really unique person at that point. He's the one who took SendGrid public. He was also a graduate of Georgia Tech, and a tech leader as well as a CFO. And he said he always, in every company he works in, it doesn't have to be absolutely perfect, but he wants to know, kind of what's the percentage of spend that's going on tech debt. And as we've been working it over the last like 5 years, a lot of CFOs say it's really helpful. And it's really helpful for us to understand, like, if you're spending too much on tech debt, then that's a bad thing. It's inefficient, or it identifies some weaknesses maybe in the engineering management. But if you're spending too little, maybe that means you're going too slow. Like, everybody is so perfect about what they do that you're not bringing products to market fast enough, because tech debt kind of signals to you how fast you're moving.
Yeah, and I think that's great. And let's, for the audience here, let's just define for a second some of these things, because I think we could fall into this stuff, right? Which is that tech debt. Well, let's do first things: maintenance and bug fixes. All right, I think that's self-defining. We've got bugs, we got to fix them, that kind of stuff, right? Tech debt, and I think we all know what new features are, and there's different categories of new features. But this tech debt is this thing that I think sometimes, like, let's just catalog it, which is, I think engineers often express that as stuff that they need to do to kind of clean up the house, right? That's the debt part of it. That like could be re-architecture, could be refactoring things, but they did it quickly just to get something out the door. But that debt builds up over time, and if they don't clean it up, there are implications. Now, the point here, though, I'm trying to drive home is that tech debt isn't meant to be done for the sake of doing, Lauren, on this either, right? Because part of the discussion that you would hope that actually happens in your leadership team is that some of this tech debt is done for a purpose. It is to make us reduce maintenance and bug fixes over time. It's to make us go faster, because no one wants to do it for nothing either, right? And so I think part of this, like, we're having the vocabulary discussion here. I'd encourage all of you to have the vocabulary discussion as well, right, on your teams, right, to understand why this is here, what are the outcomes we do when we do these things, right? We actually understand often the outcomes. We talk about this new feature will increase, a new TAM, or it'll increase, adoption in this area. But we should probably also have the same conversation around, for our definition as a company, what is this tech debt that we're doing today that we're going to budget 20% for, or whatever your number, what does this mean in that case? And what are we looking for as outcomes on that part of it? So anyways, all related, but I encourage you all to actually have a discussion around definition on these things.
Yeah, absolutely. And I think, that is having an agreement among the management team on what the definitions are, so that everyone's speaking a common language, is just critically important. Yeah. And I apologize, my printer in the background has decided to suddenly update. I think I hadn't thought about turning that off in the meantime. And you may hate this definition or this, comparison, but sometimes I explain to CFOs that tech debt is kind of, to put it in their own terms, that it's sort of like, let's say you put together an Excel spreadsheet, and because you have a board meeting in 6 hours and there's something that you had to do that hadn't gotten done. So you put together and you put in just the sort of static numbers instead of putting formulas in to calculate everything, because you just do not have the time. But your business decision was, it's not worth it for me to formulate a perfectly designed Excel workbook for this immediate use case, which is I need to bring it to market or bring it to the board meeting. But then you realize I need this workbook and I needed to, fix those things that I took shortcuts on. So I decide it's a great workbook, and I go back and I invest some time to put the formulas in, et cetera, or whatever. So that's kind of like tech debt. You made conscious
Lauren,
decisions.
you're programming, you're describing programming right there. You called it Excel board deck, but that's programming. You just defined tech debt. I think that's awesome. But by the way, I just noted a question fly by real quick by Hayden G. He was asking about they were asking about how engineers hate time tracking. I would agree, right? Probably in the Western Hemisphere, like that we see that ubiquitously. It doesn't mean that you shouldn't try hate it on this stuff too. And I think, look, there are platforms like ours that can actually help you do this without time tracking, but I would even say you don't have to wait for that. Like, get out there and have your managers or project managers do something, right? Do something as opposed to do nothing, because this is a too expensive, too strategic conversation to be reliant on just someone's unwillingness to actually do time tracking on that part of it. Anyways, I'm going to let Lauren run the show here. I interrupted. Apologies. Yeah.
No. I think that's great. And I think we should come back to that a little bit.
Yeah.
So let's just talk about personnel and headcount. If you looking at our benchmarks for private companies, most companies are spending at least 75-77% of their R&D expense on, comp and benefits. Fast growth companies, funny enough, are spending a little bit less, because I think they're investing in the systems we see that across the board. The fast growth companies invest more in automated systems to track and things like Jellyfish or other systems, but it's still a big hunk of money. Yeah. So thinking about the difficulty of hiring great engineers, how does having these KPIs help you understand that whole process?
Yeah, it's a great question. And I think, Lauren, we touched a little bit on it earlier, but look, this all comes down to scarcity, right? So you could define scarcity being like, there's a lot of money, I don't have that much money, okay? But like, this shouldn't be an issue just for companies under financial duress. Like, this is actually a critical issue for the most high go-go growth companies too, because if you can't hire fast enough, because frankly, I'm sure all of you see this, hiring is hard right now, right? If you can't hire fast enough, you have a different form of scarcity, right? But it's still scarcity here. And so we all wish our companies were growing and succeeding faster. We should. And so if that's scarcity, then the same applies here, which is, and arguably even more so, right? The last 2 years have proven that a lot of these high growth companies are software driven, right? Their growth is, you said PLG, but even if you're not PLG, your growth is driven by the products you make, the features you bring to market, right? And so if that's the case in the software world, you want to produce more of that faster. And the best way to do this is to understand what they're doing, to understand, are we making the smartest trade-offs as possible? Acknowledging this is a trade-off, right? If we're going to do this, we're not going to do that. But like, you want to make the best yield of your scarce resource today, which is talent in the R&D side.
Yeah, no, that's absolutely true. And so tell me, from your sort of catbird seat, what are the trends that you're seeing in hiring? Because I'm a business manager and I'm hearing from engineering that we need to hire a load of people in this other area, and I don't understand. Yeah. So what's going on?
No, we have the benefit of seeing across a couple hundred customers here on these things, and so we actually started the conversation, by the way, like, just for everyone else. Lauren asked me, like, so what's the ratio of QA? And I actually interrupted Lauren. I was like, well, actually, pause. Like, I would actually say amongst our view in this, the contemporary companies right now aren't really treating QA like they were 20 years ago, right? In fact, I think automation and toolage and engineers themselves are taking a much larger responsibility of QA now. It's not to say the quality doesn't matter, but it's actually part of the tool pipeline now, that people actually, that engineers want to own the quality of what they're doing holistically and treat that through part of the DevOps pipeline, part of the toolage that they're actually bringing in here, right? Analogously, the shift that we are seeing is this, this EPD combination, which, and pretty quickly everyone asks, well, what's EPD, Andrew? It's like, well, people are seeing engineering, product, and design now as the contemporary triumvirate, right? Now, granted, they don't ratio the same ratio on that stuff, but it is basically elevating engineering, product, and design to peer levels. And that is the triumvirate that defines execution units for most companies today. And I think the biggest change about it, I don't think product and engineering is that different, but the biggest change here is the elevation of design. And it's probably just in some ways the consumerization we've seen of enterprise software in the last decade, which is our customers demand a whole lot more than we did 20 years ago. 20 years ago, we'd sell it and they'd use it maybe. Like today, the usage is your revenue, is your retention, all of these things. And if it isn't beautiful and usable and all of these things, who cares if you made the right product decision or the perfect architecture? Those things come together in that way. And so we're seeing that as a real shift here around that triumvirate is really where a lot of companies are actually changing the way they talk about things.
Yeah, it's really interesting. We see something that's sometimes not intuitive, that companies that are selling into the SMB, oftentimes in general, the benchmarks are higher for their R&D than for companies selling into the enterprise, because when you're selling into the SMB market, you have a more transactional model because you have to sell high volumes, but also SMBs don't have big IT organizations that are going to help them use the product. And so you have to invest a lot. It's not cheap to build a great product that is super easy and intuitive to use. So people tend to think, I'm selling in the enterprise, I'm selling big, $100,000 or $500,000 subscriptions, that's going to be the most expensive R&D, but we don't see that actually in the numbers. So any other thoughts that you have on, for example, how does the focus on being product-led growth companies, besides design and an elevation of design as really an equal partner to development, are there other areas that you see it changing the R&D department?
I mean, I actually think that whether I'm dovetailing it with Jan's actually a question also in the Q&A around I think ideas around adoption and usage features by end users as a KPI in this too. I think they're all related here. I think we're actually having a rich conversation here, which is, especially in a PLG company, the features are your marketing, right? Or features and usage are your retention mechanism, right? And so I think, to me, the trend here is that we're getting more granular than just saying this big expensive engineering organization. It's like, let's slice by product line, let's slice by product of that product line, what category of feature on this, let's look at it in usage, let's look at the profitability per feature in this case, right? Which I think is what Jan's alluding to here in this. And I think that is a shift that we're starting to see, which is like, and Lauren, you've talked about this before, which is in PLG contexts, is R&D actually a sales and marketing cost in some twisted way, right? And I think that is, but I think those are addendums where we're seeing, I think we're just seeing the beginning of that trend, by the way. Like, I don't know if that's like EPD is like now, right? But I think we're starting to see people get nascently talk about those things as we kind of get to granularize what people are actually working on and get much better around usage and engagement metrics around toolage on that side, that you can smash them together to actually understand how are we going to actually get this, flywheel of build and retention and acquisition flying harder on that case.
Exactly. And just fundamentally, the SaaS model requires an interconnected organization. You can't have these siloed organizations like you had in the traditional world. And because, as you say, design on the product side has to be fully integrated with the market-facing parts of your company, or else they may not be designing the right things to, satisfy customers. And ultimately, it leads back to everyone using the same terminology, because when you're trying to bring the different cultures within the company, and you and I could probably riff for about an hour on the different cultures between R&D, sales, marketing, finance, et cetera. But that's part of what I love about SaaS, is that it tries to bring everybody together so that they can communicate, because you have to do that in order to produce great products and have the right kind of growth that you're looking for.
And lastly, just to add it on a short timeline, right? We don't have the luxury like we did 2 decades ago of playing this story out over 2 years. We have to play the story out every month, every deployment, every customer, every click, right? So it's a requisite that we have to work well together across functions.
Exactly. That's such a great point. So let's talk about something that is near and dear to every finance person's heart, and I'm sure every engineering manager's heart, is the budgeting and planning process.
Yeah.
So we touched a little bit on the importance but difficulty of measuring your investments, at a somewhat more granular level than just looking at R&D as one big black box. But maybe you can provide some more color from different timelines, like, and also thinking about, for companies either in the early stage or startup stage, at what point do you, as the finance person, say, we ought to be able to get some, we ought to get some product out here. We've been, investing in this. So how do you judge what's good or average or bad?
Wow. Okay. There's a lot there. I mean, Lauren, I'll make an OPEXEngine plug here, right? Like you should benchmark, right? Like you should compare, right? But I actually think that like there's no time too early to ask, why can't we do this now, right? Like we ask sales, why can't we sell tomorrow on this thing? So why can't we ask, when is this thing going to be delivered, right?
Sell what we have.
Right. And I think, look, in a contemporary SaaS economy, especially even if you're early stage, like I'll say it from a product and engineering side, you want feedback early and often, right? So the sooner you can get it, the better, right? Even if it's not perfect on that stuff. So I encourage everyone to not shy away from those conversations, challenge it. What really is the minimal part that we can actually get out there and on the way, like getting the team out there on those things. It shouldn't be this taboo thing, right? It is part of a good leadership team that can actually have that conversation, and there's trust there, right? It can't be anybody berating anybody for the sake of it. But like, I think both parties need to understand. And by the way, this is why I love this webinar, because we've got engineering leaders on the horn, we got finance leaders on the horn. You and I get to play opposite parts here for today on this one. But I think like they're important perspectives, right? It shouldn't, like the bridge that we're having, it should be the bridge to every leadership team here on this, right? We should be talking about this regularly, and we should be having critical conversations on this.
So what I'm hearing you say is definitely on the finance side, just keep asking questions and asking maybe why not? Like, why can't we?
So I'll speak to the engineering folks on the horn here, right? Which is, I actually think that, engineering leaders, like I would say, have a responsibility also of actually shepherding the choices and problem spaces up here. Right? Like, look, the worst organizations I see is where an engineering leader sits down in the corner and says nothing and just like holds up and plays defense. And then the finance leader says, like, just give me some numbers. And they're like, it's just like, they're not talking, right? So like, you reflected back to me like, well, finance should keep asking. I would actually say the engineering leaders should bring choices forward, right? Like, so yeah, like you could, like, a good leader isn't just bringing data forward for the sake of it. They should also bring data and some suggestions. Hey, Lauren, I know we want to go faster. We want to get this to market faster. Like, do you think the world would tolerate us, shipping this without these wings on this thing? You can say, well, no way. Or your sales leader say, no way, you can't. Okay. So we now have a minimum threshold. Or like, hey, Lauren, I know we want to go faster. I know this is out of left field, but that product line we've been carrying for 3 years, it takes 3/4 of my team's time. I think my team hates working on it too. I know this is a little taboo for us as an exec offsite, but can we talk about sunsetting it because you want to ship that new product faster, right? So like, I encourage the engineering side to also bring the data forward and encourage the conversation the other way, right? Because like, and you can do this by finding common vocabulary, right? So yes, both parties should learn each other's vocabulary. I'll put it on the onus of each of us to actually try to bridge the other side. Because if you don't have that conversation, like I'll put it this way, if you're not having that conversation, one or both of the leaders aren't the right leaders right now, right? I'll put it as stark as that, right? Because this is a partnership and we should be having those conversations.
Yeah, I think that's absolutely correct. And I think, to the questions of how can R&D engineering managers better communicate with finance, you're saying, step up to the table and make sure that you can provide both the data, but also some suggestions and choices for the business people to pick amongst.
And look, I'll say I'm in philosophy land here for a second, but I encourage all the engineering leaders I work with, both as peers in the past and customers today, and like, which is to teach all of us to elevate our game in that context, right? To actually, because it's not just around appeasing the finance of the business, it's actually about, like, frankly, like, owning our destiny on this stuff, right? So I think you privately talk to engineering leaders, they hate, like, finance just slashed my budget here, they just did this thing, they didn't give us the salary to actually get the hires done, they didn't do all these things. Well, I would say back to that same person that I've heard dozens of times, well, it's probably your own problem too. You didn't lead the conversation, right? Like, of course, a finance leader gave you those answers because he or she didn't know any different. You didn't give them choices and business trade-offs to make. And so own your destiny by bringing the data forward, as opposed to, somebody that doesn't understand your function to make it up for you, right, in a dark room, right? And so, like, this is, to me, like, really about.
You're not saying that finance people only operate in the dark.
That's right. That's right. Well, we can flip it the other way too. I'm sure engineering people like the dark room too. So we both are sitting in the dark. We would like to bring us all in the light, is the answer in this case.
Exactly. Well, so to the point that was asked earlier, and we got a bunch of questions about this, and I've certainly been in plenty of companies where it is hard to get everyone in engineering to understand why it's important to track your time, or why it's important to document anything. And maybe for the engineering managers on the call, any tips that you have to help, the people working for them to understand, this is not a waste of time totally. To your point there, the engineering manager who's like, my budget got cut, or I can't hire quality engineers because the salaries that finance expects us to hire at just don't cut it.
I mean,
what would you suggest?
I would say take the time to explain the why, right? Because look, I'm an idealist here, that, like, everybody in your company wants the company to succeed, and if they don't, really get them out of there. But, like, who wants to be a company that doesn't want to succeed, right? They're there with their opinion because they don't understand. Right. And so I really encourage all of us to explain the why. Right. And this, I'm actually speaking to the finance leaders and the engineering leaders on this case, which is like, yes, if you just say, like, hey, engineers, we're tracking your time, you're right, the conversation ain't going to go super well. Why are you tracking my time? Like, I do all my work at like 10 p.m. Like, well, it's like, well, actually, because we're trying to figure out how we actually get our ARR up to here, because we need to ship this new product line. But you and I both know we're spending all this time working on this deadbeat product over here. So, like, I need your help to actually illustrate to the business, to make the success team understand why we actually have to cut this product line. I know they're going to hate it, but we actually have to make hard choices. And I can't do that unless we actually have a way to actually understand where our resources are going, right? Right. So I think that's a thing where, like, I think if you explain the why, people are actually going to understand this a lot more, right? And then the inverse part of it is like, look, if we don't explain this, like, someone on the business side is going to make up the answer for us, and I promise you, we're not going to like the answer, right? That's the inverse of that part of it, right?
Exactly.
And so, really about leading the conversation with a goal, right? Because I don't think anybody wants to, like, here's a revelation: no engineer wants to work on maintenance, old product, or these things. They want to build, like, engineering teams want to build things that make the business screamingly successful. Like, I want to do that, right? And so let's connect the pieces to help people understand why we're doing these things.
Yeah, and that's something that, I think for a lot of engineers, it's hard for them to understand even things like, getting into how much of the time in R&D is spent on, bug fixes or on the product itself, and certain areas that would go into the cost of goods as compared to going into your OPEX reporting or your, expenses there, and just helping them understand that, well, it's really important to get that right. because we're going to be judged, and the value of our company, which is what we all want, as you said, is partially on gross margin. It's partially on EBITDA, and it's, valuations are crazy today, and not getting that stuff right and having to have the finance people try and wade through everything and figure that out is probably not the best way to do it.
Yeah, and I'm with you 100% on this. I think, look, sometimes I meet finance leaders, I'll say too, that like don't want to take this, like, I just want the engineering team to just be coding this thing. Like, why am I explaining, like gross margin to them and this stuff? Well, I would say, like, just like engineering leaders here, take the time to learn it and educate, right? Because, like, let's put it back in the hands of the engineer. Your options right now are 50 cents, okay? If we are measured by margin and growth, right? Period, and maybe churn in this thing, right? So if we get these numbers to this is what the market's formula right now is valuation. If we do this, like your stock, 50-cent stock options are worth $11, right? In this context here, right? And yes, I could be wrong, could be 9, it could be 15, but don't you want those to be that level? I do too, right? So let's figure out how we shave our Amazon costs down. Let's figure out how we're doing those things, because this is the measuring stick that we are all held to, right? Not just me, but us together, that will make this value go up. And so connecting those dots, whether it's coming from the finance side or an engineering leader that can take the time to explain it to you, that's how you bring people along, right? Because these are all things that are necessary and good for the business, right? I just think that people don't understand often on these things.
Yeah, no, I think you're absolutely right. So it's not just about engineering management and finance management talking to each other. It's about engineering management talking to the troops.
Sure.
And
yeah,
I think Jan wrote in chat, what worked on time tracking for me is engineering lead, make clear and transparent that this is not about tracking individuals, because people are going to undermine that anyway. But this is about understanding where the money is being invested to show, to product and finance, if the investment thesis worked out. And in some of the companies I've worked at with some, fabulous engineers, they're curious, good engineers tend to be curious and they want to be successful. So they want to know that the numbers are getting better and that it's working for them. So excellent. This is really terrific. We have a lot more questions and I want to get to all the questions. Let's just wrap up sort of the official part of the webinar and then go into the Q&A.
Sure.
So just what are your top 3? We've been repeating these themes, but it always helps to repeat it again.
Yeah, I think build the bridge, right? Like this shouldn't be a, talk once a year. Give me your plan for 2022, 23, right? Like I think we should be talking on a regular basis. Establish your metrics and language now, right? Like, I don't care if you're a 10-person company, at least start the conversation on these things. Like people always sometimes meet being like, well, let's wait for perfection to come together on this thing. Well, let's do better than that, right? You'll do better with a run-up if you actually start the conversation before you're under duress, right? Like it's like the salesperson putting metrics together after they miss the quarter. That doesn't usually go well, right? So let's start the conversation beforehand on those things. And then like to the point of metrics, like, of course, I'd love you to talk to us at Jellyfish, but the reality here is like, do something, right? Don't wait for perfection, even if it means manual collection and stuff. Like I'd preferred, like the challenges of manual collection, I would say, are the manual collections are infrequent and not trusted, okay? But they're better than zero, right? And I would say as however you can tolerate frequent incorporation of metrics for your organization, don't let engineering become this, $30 million black box that you don't know what the hell's going on back there, right? It is pulling teeth at that point, trying to figure out how to get there. Make it part of your rhythm and conversation of these things.
Exactly. No, I can't agree more. These are all important. So let's start taking some questions. We had a lot of questions when people registered. One really straight up easy question is, does Jellyfish integrate with Jira?
Yeah, great. That's the easy one. Yes, we do. We consider ourselves very strong integrations with Jira and all your flavors of source control, your GitLabs, your Bitbuckets, your GitHubs, all of those things, right? So I think we definitely do in this case, and very well.
So another question quickly for you. to the point of time tracking and other things, have you met resistance and what are your best, your tips for overcoming that when you're introducing something like Jellyfish to teams?
Yeah, I think to be open about it, right? Like to my hilarious dark room analogy, nobody likes things happening in a dark room, right? So I think we should talk about it. We should talk about why we do what we do, why they're important, what we're actually trying to do. I think Jan, I think I saw a scroll by, it's actually Jan or John, I'm not sure. The like whether like it should not be a draconian reason we're doing this, and make it clear that's not the case. But it's like we're looking for macro effects. We're looking for actually understanding how to make strategic choices as a company. We're trying to understand like who needs help, like what teams need help on those things, to diagnose like support structures needed in that stuff, right? So I really think it's important to be clear and transparent around those things. This isn't the 70s. We're not trying to count lines of code to figure out who to rank on this stuff. And, this is about trying to figure out how do we make this team, this company more successful? How do we make the machine run better?
Exactly. No, that's great. So here's a quick question on a little more complexity here, but how to balance outside engineering services versus internal talent and the cost benefit between, presumably you're going to outsourcing because it's less expensive. And as an addendum to that, if you can put it all together, is just, do you have ideas about how do you track the effectiveness or the usefulness of third-party consultants?
Well, so the good part that we've all realized today in this kind of hybrid world, remote world, is that really what does an outsourced person actually mean? I'm rhetorically posing that, right? Like, different than whether we're 1099 or W2ing them, like what's the difference here? And I think, like, I would say in one sense that we should measure that dollar outside as the dollar inside. It's just a different employee in a different place. Now, that all said, I would say that, like, I'm being somewhat rhetorical, and if you peel away the onion, a lot of firms that whether you're insourcing or outsourcing, it doesn't matter in this case. It's about depth of the person being committed to your company, innovating with your company, understanding your problem space. So both historically and still playing out today, I think more successful companies find the outsourcing things working when the product is stable, right? When it isn't doing a dramatic innovation and change in that way. Because I think it's very hard for someone that hasn't lived with this company for a long period of time to think creatively against the problem spaces you're doing, right? But I do encourage you to you can benchmark that team versus this team. There's no reason you can't. Like they are delivering, assets, code in the same way that your current team is and that stuff. So however you juxtapose your internal teams, you can juxtapose the external teams as well in that case.
Yeah, no, that's a great answer. I just want to take this is a really good question from Tim Jones. Any thoughts about tracking measured productivity to skill development, which is another nuance to the issue? And I know at OPEXEngine, we're hiring some junior developers, senior developers. So I want to expect everybody to do an equally great job, even though, there's differences there. So any thoughts about that?
Well, I think it depends on the scale of your organization, right? Like I think just the discussion of productivity and skill development, I think from Tim is actually insinuating a larger organization. I use the word larger, generally speaking, where you can talk about it in this macro context. But yeah, like I think you can look at, if you're able to kind of tear apart your product and your code bases by language, and we have tools to help you do that too. You can see which teams are stuck or moving forward in different things, and then peel away the onion, you can actually see like which individuals are actually having, more challenges in different areas. And so you can use this as signals, not the answer of like, hey, which areas people need help in. And so you can kind of use that as a starting point for skill development in that way, right? Now, a lot of the companies we work with, by the way, aren't just sitting a simple question of like, do you know JavaScript kind of checkbox thing, right? It's deeper than that. And I think when you start getting deeper in these things, then I think, look, I don't want to like take away the value of senior engineering leadership and architecture in that case, that actually there is some subjectivity here that there is absolutely a place for two on this stuff. So I think there's a balance across those two pieces, I would say.
Yeah, and in some ways, it's kind of like customer cohorting. You don't expect all groups of customers. You should look at the metrics specific to a cohort of customers
Yeah.
as compared to, expecting all customers to behave exactly the same.
I mean, the other way, just by the way, just a quick tip on like we talked about EPD and the composition there. You'll figure out as we scale.
Explain EPD.
Oh, the engineering product design, like triumvirate I said earlier. You'll figure out as a company for your product line, and in your industry, what the ratio should look like across there. I think most companies we work with actually have a discussion and a mix. They have a profile of like, hey, how many junior people in this skill set plus how many senior people in this skill set, and they have a formula they're actually essentially building the teams to in that case. I'm assuming this is a given, but I think those are other patterns and models people are doing at scale on that case.
Exactly, definitely. So we're almost at the top of the hour. We have loads more questions. There's a really interesting one on, are there any industry standards around measuring in engineering velocity metrics? That's such a, you hear that questions about that and people throwing it around. Sometimes it's not clear what they're talking about or what they mean by it. But do you have any quick thoughts on that?
Yeah, well, I would say that whoever actually asked the question, I don't see it offhand here, but like velocity is a dangerous term, or at least you should just double click into this, because I don't know when that question expressed which kind of velocity here. And so for the audience here, the word velocity is a special meaning in engineering organizations. It often means like it is around part of, let's say, the Scrum process, which incorporates story points, which is its own construct of measuring how big something is. And velocity, by definition, is about the rate of that being done on a sprint or 2-week basis on this stuff. And so sometimes when that word is used, I find business folks have mistakenly co-opted a thing where there may be confusion in the discussion, where a business person might actually mean like velocity, like let's go faster.
Exactly.
And whereas an engineering leader might be like, well, this is a very specific terminology. It'd be like, sure, we can get the velocity up. And that confusion equals a business person is unhappy with the outcome, which is I made the story point rate go up. And it's like, business person's like, I don't care, right? And so I think there's a vocabulary gap in that case. I would say, though, there are some empirical ways to measure team against team, right? Like, and it may not actually have to do, because again, we all know code bases are different here, but it could be things like essentially your cycle time, which is the amount of time it takes for you to actually get something essentially by spec to actually shipping here, right? And again, I'm being loose with my definition here on that, but that is actually measurable. We see companies like I can literally see a company that we've worked with that actually is an older line company that is I'm not going to point it where they are geographically, but you can see it just in the data how them versus a very contemporary company that is releasing extremely frequency, like 10 times a day, versus somebody taking 18 days before getting these things shipped. You can just see the juxtaposition there, and there's absolute benchmarking in that regard too. So yeah, I think there are some empirical ways to measure these things, but I would be careful with the word velocity because it's very loaded. I see over and over again with a lot of companies.
Yeah, exactly. A lot of different definitions for velocity.
Yeah.
So this has been great. I want to be sensitive to everybody's time and your time, Andrew, as well. But this has been fabulous. And if you noticed, I was running that poll. 100% of the participants responded, and 100% picked one option, which is they'd like to hear us talk about it some more. So we have lots on our plate this year looking at R&D benchmarks and R&D metrics. So I'm excited to continue the topic. But thank you so much. I really appreciate it, Andrew. This has been terrific.
Well, Lauren, thank you and the community here for letting us chat about this. This is super fun for me, near and dear to my heart. Like, we actually help all of us get better at these things. We're going to make more successful companies.
Absolutely. Absolutely. We share that intention. So, and look forward to having a beer or a glass of wine with you sometime soon in person.
Maybe with the rest of the folks in this webinar too. Like, there'll be a good meetup here that is coming up.
Yeah, exactly. All righty. Well, thanks so much.